All right then. Welcome everyone. I trust we're having a good day. We want to thank everyone for taking out the time to be with us today at the Day 2 virtual of the 2021 West Africa Property Investment Summit. And the theme for this year is Property Markets Redefined. Now, yesterday we did have an in-person session at the 4 Points by Sheraton in Lagos, and we had attendees networking with the experts. And we also had booked out exhibition stands, and then of course we closed out with a well-organized and well-attended dinner. Now today's session will run till about 3:30 West Africa time, and then we have a cocktail function which is sponsored by the IFC, and that will also hold at the 4 Points by Sheraton in Lagos. Of course, what we're doing with this event is, celebrating Edge Pioneers in Nigeria. We have a long list of organizations that will be attending, and we also have representatives from the Japanese government. So if you are following us online and you want to share this event, you can use hashtag WAPI 2021. That's hashtag WAPI 2021. And as you may have guessed by now, this virtual session is running on Hopin, and so a link will be placed in the comments so you can share and invite your friends, because we have an engaging set of sessions and presentations, and we can't wait to get started. So now, I want to welcome Thomas Mundy, who I have, watched from a distance for a while, and I am a fan of his work. He's the head of International Capital Sub-Saharan Africa at JLL, and he'll be introducing a set of panelists as he moderates the session on West Africa real estate investment within the Africa and global context. So I don't know if Tom is near us. All right, then, welcome, Tom. Always good seeing you. Just as he begins, let's also not forget our sponsors, whose logos you can see on the top right hand of your screen rotating. They've been supporting us throughout the entire event, and we are truly, truly appreciative of their support. So over to you, Tom. Thanks for coming.
Thanks, Io, and thanks for that very kind introduction. It's great to be working with our friends in Nigeria, particularly Northcourt, who equally I have been following for a long time. So thank you very much. And I think for this panel, we've got an excellent panel coming up. We want to talk about investment trends that we see within the region and put that in a global context. Io is right. I sit in a team called International Capital Coverage, which I run for emerging markets for JLL. And we look very closely at the way that global capital flows around the world and the way in which emerging markets play a particularly important role in that, and also the way that capital flows around in Africa and also into Europe and from Europe into Africa. So this is a very timely discussion. It's also very timely because we are seeing a pretty sustained and perhaps even accelerated recovery in capital flows in, dare I say it, more developed markets. So this is an interesting opportunity, a useful opportunity to put the West African dynamics in that context. So the way that we'll run this this panel discussion is I'm just going to spend a few minutes giving you some numbers and some background on what we're seeing outside of the region before we bring it into our panelists for the discussion. We've got an excellent set of panelists, very, very active in the market, and I think we're going to get some really great insight. So just to kick off, I'm going to spend just a couple of minutes talking about what's going on in the rest of the world, because I think it's useful when we're sitting in West Africa to be able to look out and get the broader context. So the first thing to note is that global capital flows, by which we mean real estate investment volumes globally, have really recovered in 2021. Globally, Q3 transaction volumes totaled $292 billion. So that's one quarter, $292 billion, at 77% up on last year. Obviously, last year was a COVID year, so we should sort of ignore it in some ways, and often we do. If we take that back as a comparison to 2019, we're about 4% below the level that we were for Q3 2019, which is quite an astonishing recovery. Now, a huge amount of activity in real estate now as capital becomes increasingly global, borders become increasingly, I'll say, redundant, but blurred, perhaps, is the way to put it. Cross-border activity, which traditionally, at least in European markets, makes up between 45 and 50% of all cross-border activity, of all investment deals. That's international money coming cross-border to do deals in country. That has recovered. We're starting to see travel restrictions ease. We're starting to see more deals done. We've seen cross-border activity increase 46% year on year in the third quarter of this year, still 15% down on pre-COVID levels. So it seems to be that there is a recovery there as real estate investors get back into the market. Interestingly, there's quite a significant shift to the living sector, and that's a dynamic that we're going to put into context in our discussion later. If you look across the sectors, the traditional sectors, office, retail, logistics, and then living, which for us is anything with a bed in it. So you've got healthcare, you've got student housing, build to rent, multifamily, that sort of thing. We've seen $219 billion of capital flow into real estate, into that real estate sector year to date. Now that's 80% up on 2020 and 36% above where we were on 2019 levels. So it definitely seems to be the case that there is a push into sort of portfolio diversification, which is very, very pronounced, where you've got this intersection of exposure to demographic growth and a very resilient end user demand to mitigate some of the risks that we saw during COVID. Obviously, logistics is another very booming sector within the European markets. If we look a little bit across some of the other themes, what are we seeing, in terms of sustainability with IFC so involved in this conference, and we're very lucky to have Temi from IFC, who's going to talk a little bit around EDGE for us in our upcoming panel discussion. Sustainability is a very key. It's just on everyone's minds at the moment, particularly coming out of COP26 in Glasgow. Just for some numbers, 980 corporations have committed to science-based targets so far in 2021. That eclipses all previous years combined since this science-based target initiative was launched in 2015. To put that into some numbers, ESG fund flows are just accelerate. The latest data we have is Q2 2021, and that shows that global flows into ESG funds have reached $139.2 billion in the last quarter. That compares to 80 in Q2, I should say. That compares to $80 billion in Q2 2020. Now, we did a responsible investing survey or survey on responsible real estate investing just now. It came out a couple of months ago. We found that 32% of all investors strongly agree that occupiers will increasingly demand green and sustainable space. Now, just for my last point, because I think it's very relevant to some of the discussions we're going to have, given that the regional focus is more with the traditional sectors at the moment, the living sector, which I've pointed out, that trend in developed markets. Overall, sentiment towards the office market, it's a bit of a mixed speed recovery, but broadly speaking, the sentiment is improving. Third quarter global leasing volumes, which are numbers that we compile at JLL, 39% higher than a year ago, but they are still 25% lower than Q3 2019. So that's quite in stark contrast to the investment volumes that we see moving into the space, and particularly into the living space. But it definitely shows that the recovery is underway, even if it's not over yet. Just regionally, the US, in terms of leasing volumes, is lagging the most. We're 31% down on Q3 2019, which is the benchmark here. Europe is 26% down, and Asia Pac, which has had more time to recover post-COVID, is 4% down. encouragingly, global net absorption is positive now for the first for Q3, which is the first time since the onset of the pandemic. So that's a little bit of context for where we are. I'm going to bring in now, I hope, if Ida's going to help me, the rest of the panelists, and I will say their names, and I'm going to allow everyone just to give a quick line to introduce themselves before we get to the nitty-gritty of what we're seeing in West African markets, which I think we can all agree are far more interesting than what we see in global markets. So just around the panel, Temolola Sonola from IFC. Temi is our sustainability expert on this panel. Is going to give us some views. Jide Adekola, Thomas Riley, and Derek Roper from Novare. I'm just going to go around and ask Temi, can you start and just give us a line on who you are, and then we'll go around Jide, Thomas, and Derek, and then we'll go into the questions.
Okay, thank you. Thank you very much, Tom. And thank you to API Events also for putting this together. My name is Temilola Shonola, and I work with the IFC EDGE program. EDGE is an acronym. It means Excellence in Design for Greater Efficiencies. And as you said, we are in the sustainability side of things. You can now ask me, okay, what's sustainability? It's just keeping our planet the way we want it to be, and for the future as well. So I work with the program here. I'm based in Lagos, Nigeria. Thank you.
Thanks, Temi. Jide, could you give us a line?
Yeah, hello everyone. Thanks, Tom, for the introduction. And thank you, API, for putting this together. My name is Jide Adekola. I'm a registered architect, and I run with my partner and a group of architects. We run a fully fledged architectural firm and a property development company. So for property development, we are trying to have unique developments that stand out, and we're very key on sustainability, which is probably why we're here today. We try to design. We believe it starts from the design, and I guess that's a key impact part of what we do. Aside that, we also want to ensure that we encourage more of collaboration and working together to do things at a larger scale. We feel if we want to make any impact, we can't do it alone. I guess that's why we're here today.
Thanks, Jide. Let's go to Tom Riley from Lango.
Thanks, Tom, and good morning, everyone. In terms of the business I represent, I run Lango Real Estate. Lango has grown over the last few years to be one of the leaders in our space in terms of investing into commercial real estate. We currently have a balance sheet between $600 and $700 million. Of prime office and retail real estate, so predominantly located in the key, as we like to call it, key gateway cities across the continent, and obviously a large exposure and a majority exposure of our business at this point in time invested into West Africa, predominantly Accra and Lagos. Thanks for the opportunity.
Thanks, Tom. And Derek from Novare.
Thank you very much, Tom, and thanks to API, and good morning, everyone. I'm Derek Roper, one of the founders of Novare, and also the managing director of our African real estate business. We have started out mainly as a developer, developing commercial real estate in sub-Saharan Africa, managing a fund, and to date we've developed 4 assets in Nigeria, 1 in Lagos, and 3 in Abuja. And looking to expand further in West Africa and other parts of Africa, developing more commercial real estate and also managing the completed or income generating real estate. Thanks, Tom.
Thanks, Derek. And geographically, I'm phoning you from Scotland today, where it's really cold, and I have to say I'm missing Nigeria a huge amount. I think Tom is also in the UK. Derek, you're in South Africa today, I assume. I know you're
I'm actually sitting in Germany, so
I can never keep up with you, Derek. Okay, so we're from Germany, we're Lagos, the UK. So I think let's start with a question which contextualizes perhaps the introduction that I brought in, which is this first, the recovery in global investment volumes. What are we seeing? How do we juxtapose that against what we're seeing in the West African market? It's absolutely clear that, broadly speaking, real estate in developed markets is on a tear. There is so much liquidity floating around. Where that liquidity goes it's mixed, but broadly speaking, it's there. Some exceptions, but clearly living, offices are recovering, logistics is super hot. Very quickly, what are we seeing in West African markets in terms of deal flow? And I appreciate we perhaps are on a slightly different trajectory. Now, Tom Riley, I think in your position as Lango, you're across a lot of sectors. What's the market saying at the moment? How are we feeling?
I think in terms of the West African market specifically, we've seen a relatively strong move through the whole COVID pandemic. If I look at our business in particular, and I guess we are nuanced in a sense that we are located to a large extent in the capital cities. Barring Abuja, obviously we're in Lagos, and Accra predominantly in West Africa. And we're also slightly different in the sense that the quality of our assets are absolutely prime. They're landmark assets. So as a result, we have a tenant base which is typically international and typically blue chip. So we may not have a wide representation of the market. It's quite specific and focused in that sense. But our take on what's happening from a basic market perspective is that things are picking up, and I don't think at the same time that the markets that we operated in saw even close to the slump that we saw in the rest of the developed world and in South Africa for that matter as well on the continent. So it's been far less of a hit. Clearly the markets had far less of a shutdown through that period. Zambia as an example never had a single day of lockdown. Ghana had maybe 4 weeks, and Lagos maybe double that. So really compared to the rest of the globe, we haven't had the same hit. And I think if we look at the level of leasing activity as an example that we've seen within our assets, it's been really strong. We've made good traction over the last year in terms of leasing. If we look at collection levels, we've had extraordinary high levels of collection in terms of our billings. So the financial health of the business, the traction in terms of leasing, etc., it's really been quite a positive picture, to be honest. Granted, we've still been through a pandemic, so it's not as though we're in the strongest of markets, but on a relative basis, I'd say, it's a very strong position. And if I overlay that perhaps with the capital side of things, we've seen interest in terms of both new investor capital flowing into the space, as well as our existing shareholder base looking to inject additional capital into the business. So I think they're from an overall diagnostic perspective, from a health perspective, is that we're poised for growth as a business, and I think the sector is as well. Albeit perhaps on a slightly more focused basis, I think, and I think the number of players, in the market that are perhaps seeing the benefit of this, or maybe, it may not be as widespread, but definitely poised for a positive turn in my view.
Maybe it's a controversial view, but I think it's a practical one, is that coming into COVID, all of us who work in African markets are used to volatility, we're used to uncertainty, and often businesses are structured around that. Perhaps that is alluding a little bit to what you're saying, is that, with European markets and real estate, broadly speaking, on a tear since 2010, any bump in the road was felt far more extreme, perhaps, compared to those of us who've been in the trenches for a little while and have built resilient business models around it. Maybe Derek, I want to just pivot that question a little bit and just expand on it before I put the question up to Jide as a developer, and then before we look a little bit at sustainability. Derek, Novare's sectors in Nigeria, with retail, being obviously a key focus. Retail is certainly the laggard in European markets, and as I said, there is this shift towards more non-traditional sectors, affordable housing, living, healthcare, etc. As a developer, as an owner and operator of a collection of retail assets in key locations in Nigeria in particular, how do you what's your view? What's your view on the potential growth of that sector? How's it faring, and how do you feel in comparison to the trends that we're seeing in developed markets?
Tom, yeah, I think it's a question of the availability of retail in Africa and West Africa, specifically in Nigeria. If we just look at the number of retail facilities in Nigeria, it's very limited to a global market or even say South Africa. So we still believe there's a huge potential for retail in West Africa specifically, because it's a huge population and there's very limited stock. Similar to what Thomas said, over the last 12 months, we've seen significant increase in our occupancy. Our occupancy is actually the highest that it's ever been at the moment. Also, our billings has increased significantly. Our recoveries has increased, the highest that it's ever been. So we see a huge opportunity in that market. We have looked at, not just retail. We believe you need to be different. It's more a hospitality, providing entertainment for the people out there, be it lounges, be it restaurants, be it kids entertainment, movies and that. And something that we've also over the last 12 to 18 months been working on significantly is healthcare within our centers. So we've been working with international healthcare providers. In some African countries, we have signed up some healthcare providers to take up space in our retail facilities. So yeah, we believe that also creates a huge opportunity. So in the end of the day, we don't just see it as retail as such, selling. It's more of a entertainment lifestyle type of facility, and we believe there's huge opportunity in that in West Africa.
It certainly seems that the concept of if we were to say go back 5-10 years, that there is very much a silo mentality around sectors, and it seems like, and Derek, I think you're alluding to this as well, once you're coming out of COVID, that the barriers between sectors are becoming far more blurred. How do we define retail? How do we define office? How do we define living? Are far more complex and intermingled than they were pre-COVID. And maybe then if we move up to Jide, as a developer in Nigeria, listening to Tom and Derek talking about the roots perhaps in the traditional sectors, but movements perhaps into non-traditional sectors, the development of a portfolio to meet consumer demand or to meet the public's demand. As an architect, as a developer, how do you contextualize that? What are you seeing? What's the sort of product that you're putting in the market? Where do you see demand for product, and how do you see the evolution of real estate as an architect?
So I think things are really changing. You have a lot of younger people also coming up the ladder, and because of that, the whole essence of co-living and obviously with the advent of COVID, it has really brought that. I mean, for design, we've started seeing a lot of requests for making sure that we design a home office, and even when we do multiple spaces where you have like flats and all that, we started to create some form of not an office space, but maybe a common area where everybody can come and converge and have almost like their office. So I think that has just like you said, the different sectors, but there are different things that are beginning to happen now. So if you do condos, most of the condos and the communities we're trying to create have their own space that those that buy the spaces actually do not mind having that additional space to use as an office, and they don't mind paying for it. So I think that has really changed, and it's really making it more dynamic, because you begin to think to yourself that, look, you have a female that has children. Can there be a daycare, that because she might be working from home? So can there be a daycare around where she can use it? It starts to change our mindset in terms of design. And I think what that is really doing, it's really bringing those other facilities to home for them in some kind of subtle way, where you can live, work, and play, so to speak. I mean, if you really look at most of what the creative developers are doing now, I mean, Popcode is doing the same thing as well, that a lot of people are thinking around, shortlets and being able to live, work, and play in that same environment. And you can see that this is actually bringing all the different segments together. So I think, I mean, everything starts from the design, and it's from the design you actually realize that this is what is changing, and these requests are not just coming from the architects, but they're also coming from some developers or some people that actually want to, their concept has changed. And that's normally the problem when you have a new wave. As an architect, if you're trying to sell it to your clients, it's a bit hard to do it. But it's easier when they begin to see it and they're asking for it. So what I can say definitely is that we have clients and developers now requesting for such, because they believe that it has started changing. Aside from that, we've done a lot of remodeling. So you have people that have their houses and you have to come back in and create a study or create an office space. We've done a lot of those type of remodeling. We've also done a lot of taking a large house and trying to make it into multi-living and still creating that workspace within. So clearly, I mean, it's beginning to change. I mean, I think it's even changing faster than we thought. Normally, we lag behind a little bit, but I think we're catching on that plug immediately.
Thanks, Jide. And I think there is a link into more sustainable work practices. But before we go on to that, I think we can't leave this bit of the discussion without discussing that horrible catchphrase, the future of work, because as a real estate advisor, we use it an awful lot. And clearly, the way that we work is changing hugely. The way that we view the role of an office is changing hugely. I think there's, if you're a landlord, if you're a Tom or a Derek, if you're anyone who owns physical real estate, the way that we consider leases, the way that we consider tenants is clearly changing. As a developer, the way that we put product into the market is clearly changing. And I'd just be interested, I think, because obviously in developed markets, this is a central discussion. How much space do we need in offices post-COVID? What's the quality and the fit out of the office look like? How many people are working from home? What's the flexibility around office space? I think it would be very useful before we go on and have a slightly deeper discussion around the question of sustainability, just to touch on this point, the future of work. And I think I'll open it up to the panel, but what is a post-COVID West African office actually looking like? Jide, you've touched on it a little bit, but so maybe I'll put that to Tom as well. And what's the demand for that space looking like? Are Lagosians still going into the office now 5 days a week, 9 to 5 with 4 hours either side for travel? How does it physically look? It's maybe a basic question, but I think it's an important one.
Yeah. So Tom, I think if I respond to that, I think what we're seeing in our office towers is that the bulk of our tenants are increasingly going back to work. If we look at the major banks that tenant those buildings, yes, there has been an element of rotational working. So people have been going in perhaps a couple of days a week, or alternatively on days sort of rotating with certain staff members. So it hasn't been 9 to 5, 6, 5 days a week as an example. But having said that, I think the amount of people in the office vis-a-vis some of the more developed markets I think there's probably been a more stable and a higher rate of occupancy than we've seen elsewhere in the world. So, I don't think from a practical perspective, it always makes sense in our markets. We spoke about, the volatility of the markets that we deal with within Africa, the level of stable power supply at home, the level of, broadband at home. I don't think that our markets are necessarily always conducive to working remotely as it is in the rest of Europe, as an example, and elsewhere. So I think on average, we've, in summary, we've seen a higher level of occupancy, first of all, and second of all, to the extent there wasn't full occupancy, which there hasn't been. I mean, but the major banks are definitely ramping it up, as an example, and I think the other sectors are following suit. So we're expecting to see roughly 80% of of the institutions that tenant our buildings have 80% of their workforce in during the course of this month, as an example. So it's certainly not nearly what we've seen in terms of a slowdown in the rest of Europe. I think the other comment to make is that in terms of the flexibility of workspace, and again, I think there's big opportunity for sort of B-grade office space to be repurposed. Potentially, I think there's a huge amount of thought that needs to go into that. But if we look at prime office towers as an example, prime space at the end of the day, which is the game we're in, there's that remains in reasonably short supply. So there isn't that much quality space around. So I think the flexibility that may come into that sector specifically are more the flexible workspace or operators, the likes of a Regis, etc., etc. And I think the outlook for them looks probably pretty good. And I think to the extent that there is space, they would be led to grow into over time. But having said that, if I just look at our own assets, we've seen good demand. Certain assets that were historically had large vacancies are filling up or have filled up, already during this COVID period. So, and it's been from big institutions, big organizations. So demand is good. I don't think we have seen the same level of change in terms of the workspace necessarily that the rest of the world is. There will be some, but I don't think to the same extent.
Thanks, Tom. I mean, perhaps it sounds trite, but I think there's I can't imagine the day when I go to Lagos and my friends and colleagues aren't wearing a three-piece suit and a tie and come into the office. We're in our flip-flops and jeans in London, and we're at about 50 to 60% of office spaces being utilized at any one time. And I think the routes and the way that the office works in West African markets is fundamentally different. And I think everything you're saying is quite encouraging to the underpinning of that traditional sector in the market. What I want to do is now go up to Temi before we go back round and talk about individual initiatives within the sustainability space. Now, I'm conscious, just as a caveat, the use of the word the phrase ESG, it's bandied around a lot. I think, to be clear, we're not going to have a conversation around ESG. I think we're going to have a conversation around sustainability much more, particularly with the role that EDGE certification has been playing in the West African markets and East African markets too, actually. In fact, all over Africa, IFC have been very active in this space. So for those of us that are not perhaps so much aware of the role that IFC EDGE is playing, Temi, could you give us a bit of background? How are we seeing the rollout of EDGE? What is its role? What's the take up of EDGE? And then we can talk a little bit about the value that it's adding to the built environment and individual initiatives.
Right. Thank you very much, Tom. So at the beginning, I said, how do we see sustainability? I think we all have different definitions for it. Let me say my own definition, which is making sure that our planet is at optimal performance, that the things that we've created are good for the future. There are, of course, some things we can change, and there are things we cannot change about our planet. So let's focus on those things that we can change and make sure we are doing the right thing. So I'll just start by briefly explaining what the EDGE program is all about. EDGE, as I said, is Excellence in Design for Greater Efficiencies, and it's an innovation of IFC. For those viewing who want to know who IFC is, we're the private sector arm of the World Bank Group, and we create markets and create opportunities as well. And both of these are to meet the objectives, our twin objective, our twin goals, which is ending extreme poverty and boosting shared prosperity. Why was EDGE created? This EDGE was created in 2015 or slightly earlier, and it was meant to assist emerging markets to be able to build green. Make it as simple and as easy as possible for this market to mainstream green buildings, so that the default becomes green rather than brown buildings. And in Nigeria, like as you said, Tom, at the beginning, that how has it been through this pandemic? EDGE started in Nigeria in January 2020, just before the lockdowns and the pandemic started fully. And when we started, I was the one working on, well, I'm still working on the program. And at that time, I was wondering, oh my God, you know how Nigerians are. We are a touchy, feely kind of people. We like to see the people we're dealing with. We like to hug people and so on. So when we started, we were not able to do that. So most of the things we did were done online. However, it's interesting though that even through the pandemic, we actually had certifications being done in Nigeria. So far in Nigeria, we've had over 167,000 square meters of projects done in Nigeria. And globally, we've done over 21 million certified space globally. In Africa, we've done 2.8 million, over 2.8 million certified space. Quite a lot of it has come from South Africa. Definitely, we're working to make sure that other countries in Africa also take up the green initiative and start building green. For EDGE, you know, when you tell me that my building is green, I need to see something. A certificate has to show that that building is green. And the certificate helps you to get financing if you want to get green finance. Nowadays, we have quite a few companies coming up with green bonds, coming up with green funds, green mortgages, and so on. And for you to be able to access that kind of fund, you must be able to show indeed that your building is green. So EDGE is an international green building certification system that helps you to show that, yes, your building is green. And Derek can testify to this because he's done some EDGE certifications for some of the malls that they've worked on. And we've had other organizations as well who have done so. And like you said in the beginning, we're celebrating these guys later on today for them being the first adopters of EDGE. Because for most people, right, being the first can be difficult, right? Everybody wants to make sure they put their toe in the water and make sure that it's warm enough before they jump in. So for these organizations who have taken our edge. We're celebrating them and hoping that more developers, more institutions, more organizations will also follow suit. For Edge, we will certify any kind of building. I would say that if it has 4 walls, we will certify. So we certify over a range of typologies, whether they're malls, hospitals, commercial buildings, residential buildings, affordable buildings, social housing, and so on, can be certified. For a lot of developers, at least in Nigeria, and I believe in everywhere as well, the first thing they think about is the cost. That how cost effective is building green going to be for me? And at least from all the various projects we've done, and these organizations or these projects have told us that usually the cost of going green can be between 0% probably to 3%. And that is dependent on what exactly you want to do to make your building green. You could decide to go 30% if you want, because there are passive ways of going green and there are active ways of going green. If you really want to spend money, you can do that and go green. If you want to go the passive way, you can also make your building green. We have an application, a free Edge application online, where you can go into and look at the various green measures that you can put in your building. So even for me, if I want to build today, I can go into that application and put in my project and pick the right measures to make it green. And these measures are simple measures that we are already doing, that most developers are already doing, in terms of the lights they use, in terms of the air conditioning system, in terms of the walls, their insulation, and several other things. They're already doing it, but it's for them to understand that these measures are green and they're making your building green and contributing positively to the environment. So let me also talk about the ways that Edge is different. I've talked about the Edge application, which is free to everyone. We've been able to make it free through the donors that we work with. So anyone can go onto that application and use it for your projects. We are also known internationally. Wherever you take the certificate, whether it's in trying to get finance through the International Capital Markets Association, it is the Edge certificate is well recognized, and by other green finance standards as well. And quickly, let me talk also about the advantages of certification. I also want to go back
make reference to, are you when you talk about certification alignment, you're talking about GRESB, presumably, and climate bonds?
That's correct. Climate bonds, GRESB, CDP, and the International Capital Markets Association. That's what So in terms of advantages to certification, I want to go back to what Jide said about the young people and next generation, right? Yes. And I believe these younger people are going to be requesting green buildings soon. At COP26, I think the loudest voice there were those of young activists for climate change. So I know that the homeowners obviously are going to be asking for green, one, to make sure that the operational costs or the utility bills are lowered in that space, and that they're also contributing to the environment. For the developers, yes, it's always, of course, about the bottom line. And we realize that, we know that. for you to attract financing nowadays, quite a lot of funds and different bonds request that your project has to be green. So this is an avenue for you to be able to show that indeed you can access those funds. You can always label that house as green once you have the certificate. You can also get good referrals for building green. The other thing we do for you is to make sure that people know that your building is green. For commercial owners like malls and office buildings and so on, there is a lot of advantages. The more that Derek has in Cameroon and Lusaka, I think maybe later on Derek can tell us the kind of operational savings they've been able to get out of building that mall as green. Of course, there's also the branding you get from getting an EDGE certificate, because it's from the World Bank Group. Be able to build and sell your project or your buildings, your apartments at good rates, because you know that you are selling a green building. Be able to distinguish yourself from competition. Right now is the best time. They tell you that when is the best time to invest? When the market is still slim, right? That's when so it's now. Be able to invest in green buildings now.
Maybe
and lastly,
if you can make your final point, then I want to bring that question back on cost versus benefits to Derek, and perhaps Jide as well.
Okay, so the last point, we're talking today about investment, right? And in 2019, there was a report that was done by IFC about green investment. And total investment that we see in green buildings currently in 2019, before the pandemic, came to 24.7 trillion naira. That is going to go into green investments all over the world. For Africa, for sub-Saharan Africa, that total is 798 billion. And Tom, you mentioned earlier on that we've seen 137 billion already in Q2 of 2020. So that investment is definitely coming in, all right, for green investment, and not just green investment flows into Africa. So I'll stop there, Tom.
Okay, so there's two things I think that we can take out of that, which I want to, as I mentioned, talk to Derek, Tom, and Jide about, is the cost benefit. Traditionally, we have more data and a little bit more track record in European markets, and we can see the discussion evolving around efficiencies, around the improvement in rental growth, and around the liquidity premium that's attached to sustainable buildings. Derek, you're implementing that, so I'll be really interested to hear from you on that. And then the other point, to your final point there about this huge wall of capital which is focusing on ESG products. Well, there's a broader discussion in Africa about the availability of products. I mean, there could be all the money in the world, but is there enough product to actually buy? And that, whether it's green or brown, it's been a problem historically. So let's deal with that first question with Derek, and then we'll move on to the next one.
Yeah, thanks, Tom. I think from our point of view, ESG has always been critical and impact, and I think it's not just, the financiers, it's also your equity providers that look at your ESG and your impact and sustainability has become critical as well for people providing equity, be it your big pension funds and that. So it's a critical part of attracting capital and into Africa. And I think we're building long-term assets that's going to be around for 30, 50 years, and we want our assets to still operate efficiently in the global context, and having sustainability of the environment and a number of factors is critical, also in Africa. So yeah, we've got our own internal ESG team. It's always been a critical part of it. As Timola said, we've worked closely with the IFC on 2 projects. Unfortunately, they only started with it in 2015. So our first projects didn't involve EDGE. But we worked with the IFC from the conception of these properties. So they provided very valuable input from an IFC perspective. And from an EDGE perspective, in the design. So our professional people and our ESG people worked from day one with them, with getting input from them in how they measure these things. And that enabled us to make sure that when we completed these buildings that, we were able to get the EDGE certificate, So yeah, we see it as, it's not a once-off thing that we need to change now once the building is completed. It has been there since the start. And yeah, we've seen a lot of more interest in these buildings because of the more efficiency from an environmental point of view. So yeah, we, for the long term, we believe there is a huge impact on this, but also attracting, as I said, capital from banks and equity investors. That's critical for the success of real estate in sub-Saharan Africa.
And when you say efficiencies, Derek, in terms of cost savings, do you really feel? Do you really feel that in a financial sense? When certainly the EDGE products I've seen, some of the EDGE products I've seen in East Africa, particularly in the logistics space, the rents are higher, but the cost savings are at least 30% of B grade traditional logistics assets. Yes. Do you feel that in West Africa as well, that you can really squeeze the asset a little bit more, you can get more out of it, and you can save money by being EDGE certified?
Yes, I think, unfortunately, as I said, we haven't done it in West Africa yet. We've only done it in Zambia. We are working to hopefully work in West Africa to have our future projects and existing projects EDGE certified. But yeah, I think from an electricity point of view, a water usage point of view, waste management point of view, we've definitely seen huge efficiencies and just being more aware of it, as a team and the people on the ground and managing it and saving in the long run.
Thanks, Derek. Tom, let's focus a little bit on maybe the final part of the equation there, which is capital. There's 2 points to this. One question is, how do you, as an owner of assets, see the value of sustainability or certification, or however you want to frame it? And secondly, how do you feel that this question around scale and how can products absorb this liquidity?
Yeah, so look, I think sustainability in terms of the buildings, first and foremost, is incredibly important. So we're busy with a number of initiatives right now, and it's been quite a well thought through plan, and really trying to get our assets across the continent, to a point where we're comfortable that there's sufficient sustainability built into them. Obviously, a lot of them, as with Derek's, have been developed over time, and it's a case of retrofitting to a large extent. So whether it's a solar project or whether it's efficient lighting or something to do with grey water or whatever it is, there's a lot of a lot that has to be done, but it's retrofitted, and I think that's something that we definitely are pushing forward with. I think we've recognized the value in doing that. Whether that translates immediately into additional rents coming through, I think that will need to be tested. But I think at the end of the day, we firmly believe it's the right thing to do for the building, but the right thing to do for the second part of the equation as well, which is capital, right? So there's no doubt that to the extent, investors globally, right? And Derek's already mentioned the likes of pension funds and so on, but there are specific impact-related investors and specific pockets of capital that are dedicated to impact and sustainability. And there's no doubt that those pockets of capital are growing, right? And growing at an exponential rate. And I think, to the extent that Africa is able to to capture 1 or even just 2% of that global capital allocated to impact-related projects will probably be too much for us to handle. So it's an enormous wad of capital that's moving into the space, and to the extent that operators in Africa, be that landlords in particular, are able to craft and articulate a meaningful story in terms of impact, is going to allow access to capital in a much greater way going forward, aside from the traditional investors that we may have spoken to over the last 5, 10, 15 years. So I think there's a definite shift in terms of that, and I think Africa should and will be a large recipient of impact capital. Being, in our view, probably the last frontier in terms of development, really, right, across the globe. So, so that's something that we're trying to push forward ourselves at the moment. We see a lot of value in that, and I have no doubt that ultimately it should translate, into increased rentals and so on, as we've seen in the rest of the world, but more efficiency in terms of the cost. So that's the way we're targeting it right now, Tom.
And Tom, presumably, without going into names, I mean, Lango is supported by a wide range of global institutional capital, and that capital can operate in any market it chooses to do so globally in real estate, one would assume. So, the background to Lango is that ESG narrative is being had by institutional capital everywhere. So, probably really, just by default, it can't be avoided.
Yeah, no, that's absolutely right. I mean, our shareholder base has grown enormously, and I think impact as a subject is important to all of them. But aside from our current investor base, there's the new pools of capital, I think, that are being established, which are have almost an exclusive impact focus, and that I think for us is very interesting. Obviously, going forward, I think the question of building something green is one thing, and getting not only green equity coming in, let's say from an impact is one thing. We're having discussions at the moment as well with our financiers, potentially about green finance. So that crosses both the debt and equity spectrum. But I think the question of scale is also very important. I think to the extent that these big capital providers globally, which may have an impact focus on, again, we need players of scale on the continent that are going to be able to absorb $50, $100, $200 million of equity. I think for big international houses with a slice of impact capital to allocate, it's very difficult for them to allocate to a small single initiative, which is maybe requires $5 or $10 or $15 million of equity. It's just not often possible. So just from a time management point of view, and also from their risk exposure, because ultimately, obviously, there is impact driving it, but nonetheless, these are still risk managed investments. At the end of the day, so I think it just speaks to the point that we need larger players on the continent. I think we're getting there, and I think those larger players are more disproportionately going to be the ones that are going to be the recipients of impact-driven capital over time, and it's up to them to then deploy it across the continent into specific projects.
Thanks. And as an architect, Judy, I want to put that. I want to probe you a little bit on that question, but I think there is a really important point underlying all of this, Tom, which is that just the huge amount of liquidity globally, and we've touched on it multiple times. I mean, just as some context, JLL as a global advisory firm, we close $1 billion of real estate transactions every single day of the year. Now, in Africa, clients are just getting bigger and bigger in the deals they do. Big European platforms, huge $250 million transactions north of that. It's very, very hard to deploy this capital on this smaller scale. And actually, Africa has to get to that space where it can absorb that sort of liquidity with IRRs that are competitive in a global context. And that's the big challenge. Scale is the big challenge. As the world for real estate gets bigger, there has to be more products in the African market that can absorb that capital. That's a perhaps throwaway comment, but I think it's important to remember when we talk about Africa, we're talking about relatively small transactions compared to the huge transactions that we see globally, and they're just getting bigger and bigger and bigger. Jide, you're creating products, so you're designing it and you're developing it.
Mm-hmm.
Let's just close off on the sustainability discussion, perhaps with you. Like, what are you seeing changing? Like, when you talk to a client, how do you see the actual implementation of of sustainability in the design and the architectural work that you do?
Okay, so I think for one, it's one thing to try and convince the clients on sustainability. But what I've realized over time is that in Nigeria particularly, people work with what they see. So what we try to do is, no matter how small, we try to bring out a sample of what we want them to see. Because the truth is, even if you tell them how much they're going to save energy and how much they're going to, they don't really look at that as they're just looking at the bottom line. How much is it going to cost? So we have to be creative about it and try to subtly bring in sustainability in. And this has to do with, just like Timilola said, about the passive aspect of it. By the time you start designing with the proper setbacks and cross ventilation and ensuring that your building is positioned right, you begin. I don't want us to look at this as there's funding available. I want us to look at it as it's an impact. It's impact driven. And when you look at it that way, because even sustainability goes beyond even the waste of materials. Construction materials is one of the highest wastes that we can find, and we just have people dumping it anyhow everywhere. So if you see it as a system, and why I like this is a platform that is informing other developers. And just like you guys said that you can have some key players, you can also have a lot of players to get that number. And when you have the developers understanding this, and understanding what we can get from this, at the end of the day, that's when we have the global impact, or that's when we have the impact within the country or within Africa. So I think it's very good, and it starts from education and enlightenment. There are a lot of things that Timilola said today that I'm sure so many developers do not know, and if they will start applying immediately. So what I think is, for us, we've been able to achieve it by showing, even if it's a sample house, showing what you can achieve. And you can now compare that with an existing building built the traditional way, and you actually do the test of temperature, the test of wind flow, the test of different other things. How are you saving water? How are you doing? Like the entire ESG thing is so wide that some people don't even look deep into so many things. The social aspect of it, the way we do run things in our company, the way you educate the staff on things like this. So for me, I think just to go back to your question, you can only show it by example. And by the time, just like IFC will be recognizing some people today, is those recognitions that will allow others follow suit. So just like it's an example, we should actually see developers go into these same buildings to go and for a tour to see what has been done, see the impact and the benefit of it. And it is when those accolades come in that people that are actually thinking of value and impact, as opposed to just naira and kobo, in this case dollar, the returns, that is when people begin to identify and see that. I mean, there's a lot of that. To be honest with you, there are a lot of us, in Nigeria that are after value. As yes, we want the money, but we're also after value and impact. And just to know that we need to begin to plug in now, because even the buyers are going to request for it. Why? Because 70-80% of our current buyers are in the diaspora. So that's a good thing, because we're getting inflow from outside the country first. Secondly, they're younger than those that used to buy before. And these guys are asking, I'll give you an example. Before, it was an issue trying to sell a service apartment in Nigeria, because people would say, no, I want to be the one to control my cost in terms of power and water and all of that. But now, because of many examples of that and how they've lived outside the country, a lot of people are requesting for it, that if it's not serviced, they're not buying. So the same thing is going to happen when this comes through, because you're going to see that people will ask for it and they will only be dealing with the developers that are providing it, you know. And when that happens, you begin to stand out as a developer. And then again, if your mindset is on the general impact, then you know that we're making this thing happen, you know. So for me, I'll just say, look, it's by example. We just have to show a sample and then explain to them, look, this is saving you X amount of power. This is saving you Y amount of over the period of time. We've even been creative about it and said, look, we're not going to sell to you at a more expensive price. What we're going to do is that over time, you're going to pay through your services so that we can get that cost back. But that won't deter you from buying the units, you know. And then when you now see it, people are now willing to pay more. So I think that's really because we need to, you know, it's good for us to talk about this and be very, you know, presentations and all. But what's important is how do we get to the grassroots? You know, like Thomas said, I agree that the big players can do it, but I believe sincerely in Nigeria, I feel we can collectively, because we have a lot of us. So you know, there are different ways to the bigger picture. You can either go through each and every body coming together and doing their own thing, but they're all following the same thing, or you have the big players just taking it up and taking over. You know, so in my opinion, that's what I feel. You know.
Thanks, Judy.
Yes.
And I think that's, you know, it'd be really interesting to revisit this discussion next year, you know, 12 months down the road, and say, well, how much are we now not just talking about the sustainability angle, but also the social angle, the importance of that architecture plays in the societal component of the ESG equation. You know, which I think is, you know, and the background there is certainly what you're alluding to, that we have to move away from the concept of pure financial returns to the value that a product can provide to society. So we've got 5 minutes left, and I think what I'm going to do is just ambush you all a little bit and just ask you in a sentence, you know, what do you think are going to be the big themes for 2022? I know the market is moving so quickly coming out of COVID. What do you think we should be on the lookout for in West Africa in 2022? Let's go round from Jide. So let's go to Temi. What should we be looking out for next year?
Okay. So I think that the built environment needs to probably press the reset button right now to change from the default of brown buildings to green. And why is that? Because we're going to see more investments in green buildings, not just green building, green investments coming up in, not because I think, Tom, you did say about some of this investment not just happening in Africa, but in 2022, I see more of this coming into Africa, and the built environment has to be ready for that.
Very good. Thanks, Temi. I think that's something certainly to give us food for thought. Derek, what are you looking out for in 2022?
Yeah, Tom, I think obviously real estate is cyclical, and I think what we're going to see next year is a continuous recovery in West African real estate, and hopefully, as Temi said, I think the whole impact and sustainability in buildings is just going to get bigger, and yeah, sort of, you know, hopefully start seeing some more new developments where, you know, over the last 2 years there's been very little new developments that's been starting.
Thanks, Derek. Tom.
Yeah, thanks, Tom. I think you know, just to maybe lead on from what Derek was saying, I think, you know, there's no doubt that that the level of supply has been curtailed over the last couple of years. So I think that's going to bode well for the sector over the coming sort of year, 2 years, 3 years. There's no doubt that that I think that should be a good thing. It's been interesting that, you know, I mean, the brief that was given to us as a panel was not really sustainability orientated at all, you know, and it's just amazing how the conversation has gravitated towards that, you know. And I think if you look globally in terms of COP 26, etc., etc. The wave that's behind this is amazing. So I think that's going to certainly, it's certainly changing people's way of thinking. It's changed our way of thinking as a business in terms of, making the assets that we own just that much greener. And I think, in terms of getting to the levels of certification and so on is also going to be something that that landowners, asset owners in general, are going to have to pursue. And I think hopefully that's going to lead to an increased level of capital, because at the end of the day, I think, to those that have dry powder and perhaps impact source dry powder will be great, are in a very strong position at the moment in terms of, the price and return equation on the continent.
Well, you're right. I mean, ESG was this time last year felt relatively fringe. We certainly wouldn't have had that discussion in this forum, and it's absolutely front and center now. So it's a huge shift. Jide, from your point of view.
Yeah, so I think a lot of new waves are coming in, prop tech, co-living, co-investing, sustainability, and I see that bringing in quite a bit of investment in. I think that also, and quite a bit of development as well, is already happening. So I can tell that, even for us, our stock alone on smaller living spaces, studio apartments, 2 beds, 1 bed, they are way more than what we had before, and we can see that going across the sector. By the time this goes on for years, we could also bring in sustainability and all. We have a lot more people thinking wide and thinking impact. So I believe that over the course of the year, things will begin to change. You will have better environments, and with the advent of this certificate, I'll tell Temilola that I'm coming for my own certificate actually. But I think if we have these kind of things go on and we keep on seeing the impact of people that have done it, more people will join in. And I believe that I seriously believe that will happen. Like you said, what we're talking about now, we couldn't have been talking about it last year, and I believe we'll be talking about something next year that will be a lot bigger than this.
Well, thanks everyone. I think we've just gone 2 minutes over, which is not too bad. I think we could have carried on talking for all day actually. So just from my point of view, I want to say thank you. And I mean, my forecast for next year is that I really miss Lagos and Nigeria. So I'm looking forward to getting back out to Lagos and having a coffee in the cafe on the lower floor of the Wings.
Yeah, I agree with that.
So I'll hand back over to you. Thanks so much to the panelists.
Temi, thank you so much, Tom, for just expertly moderating this panel. I'm not sure anyone here or in the audience expected anything less. Panelists were outstanding. When I saw the roster, I said, why am I even here? So thank you all for your comments. Thank you so much for shedding light on these critical issues.